Hi folks, I'm Will Bridges from 123 Trade, and in this video we are going to talk about oil news, June oil prices, what we might see this summer for oil, targets. We've talked about where Goldman Sachs is looking previously. I want to show you guys where oil demand is now versus where it was in 2019 and 2020, so we can get a better feel for where price may be headed. And we're going to come out with lots of information like this on a regular basis. A lot of it's going to be time sensitive. If you want to support us, press the thumbs up button. I believe in you. And otherwise, you're going to want to push the subscribe button, ring the bell so you can actually be sent notifications for this. That way you can find out immediately when we release time-sensitive information like I'm about to show you here. So let's go ahead and cover our base. And everything in this video will be for educational purpose only. You do with the information what you think is best. But you do have to risk it to get the biscuit, folks. There is no such thing as a guaranteed trade or investment. Let's get this show on the road, and I want to show you guys some news. And what this is, this is a chart here that's showing. We'll blow this up a little bit if we can here. I'll make this a little bit bigger. Can we do that? Can we do that? We have the technology for that. We do. Perfect. Okay, so what this is showing is really just oil demand, U.S. gasoline product supply. So as the economy opens, obviously people are going to drive their cars more. They're going to go on vacation. They're going to drive to work. They're going to do all sorts of things. We may never see the levels that we saw in 2019 again. But that being said, we are inching towards it. So this yellow line in the middle, this is 2019. Or no, excuse me, this is 2020. That big dip is the COVID madness. And that's where everybody stayed home. This was our 2 weeks to flatten the curve. And really just make a big curve on oil. And oil actually went down to negative $17 in the futures market because there was so much oil supply that people didn't have anywhere to keep it. So people didn't want it to get delivered to them. So they literally paid to not take delivery of this oil, which is pretty crazy to me. And we've this green line here, this is this year. So you guys can see that we started at a little bit lower level than we did in 2019 and 2020, excuse me. Because 2020, we were kind of at the same level that we were at in 2019, all the way up until, March. Okay, so as soon as March hit, this thing fell like a rock and it's been down, and then we started back on this side over here, on our green line. Okay, so we have been inching up as economies open around the world. Demand has been big. So we may not get back to 2019 levels of demand, but that being said, the money supply is way different than it was in 2019. We've created, I'm not even sure anymore, probably 30% of the money supply since then or more. So that being said, if we do get to the same level of demand, that we had in 2019, we should see much higher prices than we saw in 2019, which is, fairly evident when you get over to the chart. And I also want to point out there's another fun one out here. This is the gold to oil ratio. And what I'm showing you here is just back to 2006. And this is pretty much, this is a big uptrend. You guys can see here that, the gold to oil ratio really goes through the roof when bad things happen. Okay, so when bad things happen, people buy a ton of gold, commerce slows down. Usually this is a big product of an economic, depression or a recession of some kind. You're going to see a big boom in gold and a lower price in oil. So this ratio goes up through the ceiling. And you guys can see this ratio has been going up for a long time, for the last 15 years. So gold is going to continue to be a great investment, just based on this chart alone that we've got this big uptrend. And this high up here, this is gold's all-time high that happened within the last year, back in April. So all of that said, actually this is just where the high on this ratio happened. I think the high on gold was actually later in the year, but either way, doesn't matter. We're actually kind of coming back into the meat of this market here. We may be poised for a continuation on our uptrend in gold as well, just to show you guys that. And oil is actually more in line with where it normally is in the whole spectrum of assets. So that's something that we need to pay attention to. We might see a little bit more normal trending activity on oil. But as far as the numbers for inventories go, we have seen, consistently decent inventory numbers. Inventory has been falling. So we're getting to a point where inventories are smaller. Supply overseas is actually increasing outside of the United States. So it is coming down here in the U.S. And by design, they are doing that on purpose. But that all that said, none of this stuff really matters. It just kind of provides us a narrative that oil may be in a position that it can make new high prices, because end of the day, that's really all that matters. And I want to show you guys something here. And there's a lot of tools you could use to trade. That line that I just had there is the current trend on oil. And there's an old strategy that I like to use. It's called target trading. And I'm going to go ahead and turn on that indicator. And target trading is a counter trend strategy, just to give you guys an idea of what it is. When the market makes a move up, okay, it makes a strong move up, okay, usually there's going to be something that happened a long time ago, that, let's just say it's going to move down, and then it's going to come back up again. We might get something like that. That might be our ABCD starting at my bottom elbow, comes up, comes down, and moves up to my extension level where my right elbow is, okay? So that being shown, okay, the market likes to come back down and test this level, okay? So it likes to stair step its way up, okay? And if it doesn't hit each stair, eventually it likes to come back later. And I'm going to show that on this target trading chart. So if you didn't understand all the weird arm stuff I just did, here's what it looks like on the chart. No, there will be no more Macarenas in this video. And I'm going to dump the weekly targets. I'm going to dump the daily targets because, for all intents and purposes, those aren't going to be as important. But what I want to show you is that targets get hit. Okay, so all these little purple lines here are targets, and we haven't seen targets not get hit in a while. Okay, so these targets are all the way back from 2014. And I'm going to go ahead and circle a few of these. I got one of them circled here already. But let's go ahead and get a couple circles on these ones that got missed and show how long ago that these got missed, because it's really been quite some time. There's a few of them. That's really the only 4 of them that we're going to find on this chart for the last 7 years that haven't been hit, other than the ones we have on our current trend. Okay, so what I may do is actually just draw lines from each of those targets so you guys can see where those are. Let's get some horizontal lines on here. We'll make these green. Okay, so let's lock this tool up. Let's go ahead and put in our missed targets here. This one's all the way up at $99. That's that $100 oil price that a lot of options traders are looking at. That's somewhere in the $83 range that I just put on there now. This lower target actually got hit all the way over here. Okay, so that one's no longer valid. So I'm going to go ahead and delete this one. And this lower one on the bottom here that I already had drawn for whatever reason got hit a couple of months later. So I don't care about either of those prices. So those are our missed targets above that we haven't gotten to yet. And those aren't the only prices that I'm going to look for. Okay, so those are just places where this thing may take a breather. So next thing I want to do is I want to figure out where the resistance levels are, where the market made previous highs, and where it turned around and went the other way. So I'm going to have the charting software do that for me. And I'm going to have it just draw my smart resistance levels on this daily time frame. Okay, and this daily time frame, okay, it's going to have a decent number of resistance levels. We're not quite to any of the ones that are here. The next resistance level is at $75.24. We're at $73 and change right now. So all things said, Goldman Sachs is talking about $80 oil. That's really what their call was. It's probably been a month or so since they did that. And really, I've been following that since. And it's been, a relatively lucrative experience so far because, the market's come up ever since they said that. And here's our current trend. Okay, so looks pretty bullish to me. And a big reason why I think it's also very bullish is because we haven't seen a move this strong since 7 years ago on the way up. And a lot of traders make, there's a lot of fun phrases in trading. A lot of people say, fast up, fast down, fast up. Quick moves in the market are usually going to be returned with a quick move. This is a relatively quick move that the market made to come down as far as it did. This is an equally quick move on the way up, and I'm going to show you why, because we've blown past a number of targets. There's a missed target. Here's a missed target. We still haven't come back and hit. We got close to it, but we didn't get there. Here's another one that we missed. Here's another one we got close, we didn't hit. Here's another one more recently that we got close and we didn't hit. So what this tells me is that we may be in territory that we don't get to test all these targets, at least not anytime soon. It could be 7 years before we get to test these. This is the last time that we didn't test these, and really, the lower ones, the ones that were closer, okay, so which would basically be, these top 2 purple circles that I have on the right to put things in perspective. These ones got hit, but it took, let's figure out how long after these targets got missed, because we're talking about a considerable period of time here. And this was on December 23rd of 2014 where we were at this price, and we hit it again all the way over here in 2018. So a very long way. 884 bars from December 4th of 2014 all the way until April 30th of 2018. So it took a very long time for us to come back. So I don't think this thing necessarily has to come back and hit my missed targets, just because, well, when the market came down, that's what it did. So I'm going to expect kind of the same thing on the way up. I just need to figure out where I may be able to get in, where I may be able to get out, and then move on from there. So I've got lots of price levels to look at above that I might be able to use as targets. Okay, I've got a real close one, $2 away. Okay, and actually I want to get all the way at the bottom of this. I'm going to make sure I get all the way at the bottom. Let's zoom in here a little bit. And I want to make sure we get the right wave pattern on here. Because really, even from an Elliott wave perspective, we're still on wave 2. So we haven't even gotten to the part where we hit a high price, come down, and then hit our exhaustion level. We're still technically on wave 2, according to Elliott wave theory. For those of you that follow that, I may real quick show you guys that before we get done here. But Goldman is looking for about $80, okay? And I'll go ahead and show that here. That also happens to be our extension level for our Fibonacci range on our daily chart. It's roughly where I just drew it. I'm off by 10 cents, something like that. Not a big deal. So that's where Goldman is going. And what we're looking at is that there might be a little bit of resistance on the way up there, because there was, all the way back 3-4 years ago in 2018. So it may not get there real quick. It could. But our extension on this range is really not expected to be for another, $6, and our next stop on it is at 75. So if I want to get into something like this, then maybe I just come down to a lower time frame. I look for a place to trade this continuation of the trend, and there's a lot of opportunities to do all sorts of things. If I go ahead and dump everything that's in here, let's go ahead and pull a quick fib from this most recent wave here. Okay, and what we're looking at is a slightly higher price. This is going to be short term. So, we already talked about $80 and $100 and all the other crazy higher prices that you could hope this thing gets to. Near term, I think that maybe this thing takes a little breather at this 75 price, which we also called out. This is the previous resistance level. I'll go ahead and turn that back on just so you guys can see that. Smart resistance, okay? And let's go back to our daily, draw our line on this price. So there's our price. Come back to our daily where we just were. And that level just happens to be our next resistance level. That's the continuation of our Fibonacci. All this stuff, kind of fits together. There's a lot of strategies out there, but it's a lot of different ways to look at the same thing. Okay, so my process here is just to figure out the pattern, because that's, historically what's gotten me paid. So let's get down to the 1 hour. Okay, maybe we didn't get quite what we wanted on that 2 hour. Oh, not the trend line tool. I want the ABCD tool. Okay. And just picking from our low. Actually, I want to get all the way down at our low down here. See if we can get all the way down here. Maybe not. I think we'll come back to the 2 hour and do this. It seemed to go a little bit smoother. We'll delete this other Fibonacci range that we've got here. Get that out of our way. And I'm going to take this hard low here and see what we've got. Okay, so options. Okay, so when I say options, I'm talking about what do I do with this? Okay, so right now there's not a ton of opportunity to just buy right now unless you're willing to go to much higher prices, in which case you may want to have a stop loss, all the way down somewhere here. Okay, below our missed target that happened outside of this AB boundary. I'll go ahead and make that red. Okay, so maybe right now is not the perfect time. That said, it depends on how far you think this thing is going to go. It could come up to 75 pretty soon. If you're the type of person that likes to scalp, then hey, you might be in this right after you watch this video, and you may have your stop loss up here somewhere higher. Maybe even like somewhere that high. And this may be your scalp opportunity that you look for. Okay, so there's a lot of ways to jump in on this and try to make money in the short run. Okay, there are a lot of ways to try to pile onto this thing, and anytime it dips, just buy the dips. That's totally up to you guys, whatever you think is best. If you want to be able to get a better look at this chart, another tool that I like to use a lot is going to be this zigzag tool, and this is a common one. This is not a premium tool. But for those of you that are looking for better places to put your Fibonacci levels and better understand the patterns that are going in the market, this kind of combines a line chart with your candlestick patterns, so it makes it a little bit more clear what the waves look like. So if you guys have questions about that, by all means, then send us an email, visit the website, We've got lots of information available. We do live trading sessions with our clients every week, and we're going to talk about oil. We're going to talk about precious metals, oil, silver, gold, Forex, stocks, you name it, European stocks, American stocks, everything under the sun, okay? We can help you get a Forex account, CFD account. You can trade all of those things in the same place. And really, we can offer all that service to you for free, including the live sessions we do on Friday. You'd be crazy not to get started with us, okay? So if you liked the video, press the thumbs up, subscribe, ring the bell. There's going to be lots more videos to come. Thank you for joining us, folks. Again, I'm Will Bridges from 123 Trade. You be good or be good at it. Take care.